Hello, everyone, and a very warm welcome to today's major markets update for Friday, June the 30th, 2023. We have reached the halfway mark for the year. Will the second half be as easy as the first half? Most likely not. Why not? Because we're going to wrap up larger fourth and fifth waves of this potential new impulse to new all-time highs for some indexes, whereas we are still completing C waves for other indexes. Remember, we cannot allow a one-size-fits-all approach. I have no summary slides. I think the slides themselves are quite explanatory. Here we have the NASDAQ, the regular NASDAQ. Ideally, we would have liked to see it bottom here at the 100% extension, 13,040, plus or minus about 100, 160 points, plus or minus. We didn't get that. Remember, we only got a 23.6% retrace, but a loud and clear ABC low for a zigzag. Now, it's still possible that we are going to see a more complex double zigzag, okay? It is still possible. Why? Because we have not made a new all-time high just yet. It will require a break at a minimum below 15,050 on the NASDAQ100 and below 14,850 on the NASDAQ100 to confirm. That is our cutoff. So this is still a potential. It is the alternative. The primary on the hourly chart using the NASDAQ100 is indeed that we are in this wave 3. We said above the June 12th high, I believe it was, or June 28th high, sorry, new, by the way, then we are in this wave 3. So far, it is 5 up, 3 down, and we're working on another 5 up, okay? Of course, we drop below these cutoff levels once again, then all we have is a B wave, and we're going to go once again back to the mid to low 14,000s. For this double zigzag, ABC, ABC, ABC. Very complex. It's still possible. It's not preferred. The preferred path is this 1, 2, 3, 4, 5 into the low to mid 15,000s on the NASDAQ. Okay, somewhere around low 14,000s, also on the regular NASDAQ, and mid 15,000s on the NASDAQ 100. Sorry, just want to make sure we cover our bases. That would reach then the 100, what is 176.4 to 200% extension for this wave 5 in green. You can see my cursor. 1, 2, 3, 4, 5. 1, 2, 3, 4. I don't have 5 here on the hourly chart, but you get the idea. Then we'll see a much larger pullback for this red wave 4, and then a final rally for this wave 5 for C/3. 1, 2, 1, 2, 3, 4, 5. If this is a C wave, 9 out of 10 times it's 5 waves. Doesn't have to be, okay? It can be 3, but 9 out of 10 times it's 5. What's the other time? It's not 5. It's when we're dealing with a ending diagonal, which sometimes can be very tricky to elucidate. I still have a hard time counting this rally from October into November, December as 5 waves up. I have a very hard time seeing it, so that's why I still label it A, B, C. Normally, B waves top somewhere between 76.4 to 50% retrace. But we all know we can retrace more. We can get irregular B waves as well. And then the B wave is part of a larger flat. But we start off with a usual 50 to 62% retrace. We can only get a 38.2%, 23.6%. We just don't know beforehand exactly what it is. That's why we anticipate, we monitor, we adjust. So the NASDAQ should be in this way, 5 in green. Remember, this was the gray, green, green, red, red path. Gray path filled in exactly, top exactly to the T where we had to. We filled to bottom. It happens. And we should now be in this green 4. So far, the gray line has filled in. The green line has filled in. Yes, we fell a little bit short. Well, beggars can't be choosers. So now the green line is filling in, and I expect these 2 red lines to fill in as well. Okay, and then the NASDAQ will do a 76.40% retrace of its 2022 decline. Well, actually, it already bottomed or topped in 2021. you hear my cat in the background, I apologize. It's one of the other idiots. So we can still have the alternative wave count for this green B, and then we get the drop off. We know our cutoff levels. First warning, 15,050. Second warning, 14,850. And I wanted to also show you the bigger picture Elliott wave count for the NASDAQ 100. The NASDAQ 100 is in a different wave count than the S&P 500. Okay, let me show you the yearly chart for the S&P 500. The main difference is where we bottomed. Let's see if I can find it. In 2009. The S&P 500 dropped below the 2001-2 low, A, B, C. Okay. The NASDAQ and NASDAQ 100 did not. They bottomed here in 2002, rallied, dropped, but made a higher low. The S&P 500 did not. It made a lower low. So this was a B, and a C. The NASDAQ did a 1-2 setup. And then I believe, and we simply count down years as corrective years. Very simple. That we had 3 here was a slight down year. So we did about 23.6 to 38.2 retrace 5. So we could have just bottomed for primary 4. Okay, let me zoom out. So this could still be the primary 4. That's why we're tracking 1, 2, 3, 4, and 5. That is not possible on the S&P 500 because we've made a lower low. So we cannot have a 1-2 setup. So it was a different low for the S&P 500. We still get a 5, and then we get our big decline. So again, this is possible for the NASDAQ and NASDAQ 100. It's not possible for the S&P 500. S&P 500, we had our cutoff already yesterday. Yesterday was still a little bit ambiguous. Again, this rally here apparently was a leading diagonal wave 1. Leading diagonals are very tricky. So this was our initiation move, 1, 2, 3, 4, 5, relatively easy. Fell a little bit short of this ideal wave 2 target zone. It's okay. I think we missed it by about 7 points. And then today, gapped up at the, in my humble opinion, that was a very nice signal to go long because we definitely gapped up above everything. And as you can see, we already topped in this ideal wave 3 target zone, which I already provided to you yesterday. If we would break higher, then that was the target zone. And I think we've now done 1, 2, 3, 4, 5 waves up. We should see a pullback soon for wave 4, and then another wave 5 to ideally 4470, 4485. Now 4470, 4485 gets us very close to this red 161.8% extension. That's this rally, 1, 2, and we extended 1.618 times. 4509, what is it? 4509, somewhere around there. And then we have the 76.4% retrace at about the same level. Okay, just at about the same level, a little bit lower there. So there's another nice fib confluence of these. Remember what happened with the NASDAQ when we got this nice fib confluence on 3 different wave degrees, green, red, and blue. So it seems logical to assume this wave 5 is on the way, with the shorter term wave count targeting 4470, 4485. Bigger picture, getting very, very close, right? That's off by 20, maybe 30 points or 4,500 points. It's nothing. That's well within the margins of error. And then we have our 1-2 setup. I've counted this as a irregular running flat wave 2, ABC, right? ABC, and then 5 waves lower for here for this 2, 1, 2, 3, 4. Green 3, green 4, and now in this green wave 5, green wave 5. Okay, subdividing into 1, 2, 3, 4, 5, as I showed you for the NASDAQ 100 as well, 3, 4, 5. So that looks good. So I think we're running towards this larger top, the third wave. Then we get our drop, ideally back to the 100% extension, but we don't have to, because as you remember, we fell short on the NASDAQ, for example. And we fell short, of course, also on the NASDAQ 100. It was a very marginal decline. We still can reach it, by the way, if only we got is a B wave. So we're not out of the woods just yet with technology. right? Technology is not there yet, but this starts to look really good because the S&P 500 has made a new uptrend high. Technology hasn't, it's lagging. Now, this is an article from all the way back October 2017, 2022. Nobody believed me back then that we would, if we would go above, let me open this chart so you can see it more clearly, above about 38.60, that we would rally to 43.50, 46.50, okay? So we have arrived. So once we got into the 43 zone, it's time to become cautious, but we can't go all the way to 46.50. So 46.50 is really not far off of this wave 5. Did I know back then how exactly everything would fill in? Of course not. It's a B wave, so we expect 3 waves. That's it. But we knew once we get above this key level, and this was already October 17, 2022. 8 months ago, 8.5 months ago, we knew if we break out that we would reach this. So the current advance is still nothing out of the ordinary. I have labeled this as a black wave B. I would label it here as a blue wave B. Potato, potato, whatever wave degree you want to add to it, it's fine. It all depends on if the all-time high was a super cycle, a cycle, or a microwave, whatever you want to call it, it's all the same, as long as we have the same potential, of course. That said, I expect the top here reasonably soon, next couple of days. Quite a drop back to about 42.40. Not necessarily, we might stall here about 42.75. Okay, we might stall there. And then another rally higher, which matches seasonality to again 4,600, etc. Nothing out of the ordinary. Okay, so bigger picture-wise, I've shared this one with you before as well. We knew back here, okay, we're going to look here for about 4,200, 4,300. That's the 50 to 62% retrace. That's what you start off with. That's normal. But you know, we can get a 78.6% retrace, and we can even get an 88.6% retrace. And in the case of an irregular B wave, we can make an all-time high. Don't believe me, 2020 was an irregular B wave new all-time high. A, B, C high, lower for wave A, B, C higher for wave B, 5 waves lower for this C wave. This was the loudest and clearest 5 waves lower. This was a very tricky B wave. Starts to look a little bit similar. See that? Starts to look a little bit similar to A, B, right? There. So now we're marching higher. Here was what we had QE, so maybe we're not going to make it an all-time high. But it is possible that this wave A, this one, will be a flat, and this wave C will be 5 waves lower. Okay, so it is still possible to make a new all-time high on this one. But I cannot count the top we made as a smaller degree 4th wave. And I shared with you last week, I cannot make this of a small degree 3rd wave, this a 4th wave because of the overlap we had here. This was wave 1, this was wave 2, very shallow. And then you can simply see 1, 2, 3, 4, 5, super easy. So nothing out of the ordinary. We already knew this way back. So we have arrived, we're in this target zone. We're not making much progress, honestly, right? We're not making all that much progress. So we're going to stall around here. Most of the gains have been made. Again, we can make a new all-time high if it keeps subdividing. It's fine, but we start off with normal assumptions. So we're there now. Not too bad a call, right? Not too bad a call. This, I think, was already posted in May last year. So ABC is our general path. And nobody knows exactly how, of course, it's going to fill in itself on a daily basis. But we anticipate, we monitor, just so we should be in this black C wave, and C waves 9 out of 10 times subdivide 5 smaller waves. So 1, 2, 3, 4, 5. Okay, and this was a leading diagonal 1. ABC, nice clear zigzag lower 5, 3, 5, and 1, 2, 1, 2. And then this wave 2 was a irregular running flat, wave 2, it's fine. Second waves are either zigzags or flats. They cannot be a triangle, so picture perfect. I like it. Nothing out of the ordinary. We are on track. 1, 2, 3, 4, 5. So semiconductors, how are we doing on the semiconductors? Can still have done this B wave as well. It's still not making a new uptrend high. We're not making new uptrend highs. We have to keep both options open, okay, on the table. We don't have that anymore for the S&P 500. This looks like a nice, loud and clear Fibonacci-based impulse pattern. Semiconductors can still do the same as I showed you for the NASDAQ 100. However, we now have also a potential impulse higher. 1, 2, 3, 4, 5. We topped here, ideally for 3. I shared this one with you before as a potential diagonal, which is now morphing into a standard Fib based impulse pattern, where this wave 4 low missed this wave 1 high by about $2. So we're good. And then we have 5 waves up. You can see here, follow my cursor. 1, 2, 3, 4, 5 into the ideal wave 5 target. So we might get a pullback here to about 3,600, 3,550 for wave 2, 3, 4, and 5 to also finish this one off for this red wave 5. Again, if we start breaking below certain price levels, 35.25, ultimately, of course, 34.85, I believe it is, then we are in this C wave. So we still have this potential A, B, C path versus this one. I noticed I don't have the Dow Jones presented, so let me quickly pull up the Dow Jones for you. The Dow Jones looks pretty good as well. Where is this? Can we still have this wave C of B2? Yeah, possible. I don't like it. I like this one better. We topped here for 3, 4, and 5, etc. Okay, so this looks a little bit better, bigger picture-wise, or sorry, smaller picture-wise for an impulse. But please be aware that every single chart is in a different wave count. Last but not least, IWM keeps moving higher. I think we can expect it to reach into the low 190s. All right, so I think we've covered our bases. We went over hourly charts. We went over large outlooks that have reached their upside potentials. We've went over the bigger picture. We've went over yearly charts, I believe it is, wherever it is. And here it is, yearly charts, and how some indexes can still allow for a wave 5. Now note, this is on a log scale, okay? So yes, this might look bigger, but this is on a log scale to make sure that we catch these smaller swings in numbers as well, because if we don't log it, it will look very, very tiny. We want to make sure we count down years as corrective and up years as impulses. All right, so that's all I have for today. I expect soon a little pullback for a wave 4, then another rally for a wave 5. For the S&P 500 should reach about 4,500 plus. Now wave 2 here was a zigzag, so this wave 4 should likely become a flat. So it wouldn't surprise me if this wave 3 is going to fall a little bit short here of this ideal 45 or 5 target zone. All right, that's the same as we saw here. If that's the case, the B wave will do the trick, because we have a little bit lower target zone, 44.70, 44.85, which is about 30 to 40 points below. So it wouldn't surprise me if we're going to stall out. We get the A wave, irregular flat B wave, and then quite devastating C wave before the next wave 5 materializes into that ideal, a little bit higher 4,600 target zone. Of course, we didn't know back then where exactly this would top. That's as far as one can look around many corners, and I think we've done a great job. Can't get it always correct on the daily scribbles and the daily interpretations, but we will try to fit this all within the bigger frame, the bigger picture, and so far it is working pretty well. We knew that if we would break above this high, which we already did yesterday, but just briefly, we didn't close really well above it, that we would see this impulse. So these are good, easy trades, and I'm going to look here for a pullback soon. Quite overbought, as you can see here. When we get this overbought, we are close to a 3rd wave top. We get a 4th wave, right? We get close to a 3rd wave top. We get a 3rd wave top, and we're going to get a 4th wave. All right, that's all I have for today. Thank you so much for listening. Take care, trade safe. Again, there will be no update on Monday. Of course, not on Tuesday, because on Tuesday the markets are closed.
but will also be closed on Monday in observance of Independence Day already. Take a break. It's okay. We're not gonna miss too much, I believe, on Monday. Have a great weekend. Happy 4th of July. Please celebrate and protect your freedom and independence. And I'll catch you all on Wednesday. Bye.